Hey YouTube. So I was reading this article about what Warren Buffett did in 1987 and I thought it was interesting and I wanted to share it with you. In a nutshell, stocks had risen quite substantially in 1986 and there was this crash towards the end of 1987. For the most part, Warren Buffett did not do anything during that crash, just as he did not do much during the crash we just had in the first quarter. But something interesting happened afterwards. So let's take a look at that in this video. So, in his 1986 shareholder letter published in early 1987, Buffett wrote, "We currently find no equities that come close to meeting our tests." He observed that euphoria on Wall Street had driven stock prices up to levels that didn't correspond to the company's underlying business prospects. As a result, during 1986, Buffett put most of Berkshire's Hathaway excess cash into bonds, seeing them as the least bad alternative. Doesn't this sound very familiar? This is exactly what has been playing out so far and what played out for Berkshire Hathaway in 2019. Then, just months later, Wall Street euphoria finally evaporated in dramatic fashion. Stocks began to slide in the first half of October 1987, and on Black Monday, October 19, 1987, the stock market plunged more than 20% in a single day. Despite that record-setting drop, Buffett didn't buy much stock during 1987. At Berkshire, we found little to do in stocks during the past few years. During the break in October, a few stocks fell to prices that interested us, but we were unable to make meaningful purchases before they rebounded. This sounds very familiar. In March of 2020, the market plunged by nearly 36%, but it has also rebounded very quickly. And as we saw in the video I did about what Buffett was doing in Q1 of this year, we saw that Buffett had not made much purchases of stocks. This is very similar to 1987. Part of the reason, I suppose, is that it happens so fast. The stocks plunge so quickly that you barely have time to react and to buy into those stocks. I have a solution for that. What I usually do is I place limit orders. So for example, I placed a limit order for PayPal to buy a certain number of stocks at say $86, and that limit order continues in the platform for a period of 6 months. So lo and behold, during the bottom in March, that limit order got executed. And so that's my solution of trying to get into some of these stocks when they are flash crashes. So despite that very dramatic crash in 1987, the stock market actually rose 2%. And this is the chart of that period in 1987. The stock market rose for the early part of 1987, had that dramatic crash, but by the end of the year, it still managed to eke out a return. My feeling is that 2020 will be very similar, just that the period has been flipped a little, where the crash has happened early in the year and the recovery will happen later in the year, and we'll probably end up positive for the year. I think there are a few more takeaways from that period and that lesson. So overall, Buffett's belief that stocks were overvalued at the end of 1987 turned out to be wrong, because over the following 20 years, the market posted a total return of nearly 500%. So if you have been good in timing the market, you could have made perhaps more than 500%, but even a 500% return is decent. But in fact, Buffett made a even bigger return. So while investing in the market would have delivered a 9.3% compound annual growth, the same 10% invested in Berkshire Hathaway at the beginning of 1988 would have grown to nearly 200,000 over that period, good enough for 15.8% compound annual growth rate. And this is the chart. So whether you think the market is overvalued or undervalued at the moment, you'll probably be right in both instances, because we know over the long term the market will rise. But Buffett was not wrong either. He set out that crash, but he still managed to find opportunities later on to deploy his cash. And those opportunities resulted in Berkshire Hathaway achieving a much higher return. In fact, Buffett managed to find two of his most successful investments of his career after that crash. He bought Coca-Cola and he bought Freddie Mac. And these opportunities propelled Berkshire Hathaway to much higher heights later on. So the period does seem very similar, although there are differences. During this crisis, we have had massive job losses, and of course we had a huge number of deaths due to the virus and due to the pandemic. While the reason for the crash may be different, Buffett was steadfast in his attitude. He did not overreact. He did not manage to buy during the crash, but he did still find opportunities later on that in fact became among his trademark successes. And I think that's an important lesson for us. If you would like to be a patron and a supporter of the channel, jump over to our Patreon website and you can subscribe to one of our membership levels. You can also gain personal access through me and also my immediate thoughts and actions in the stock market through Discord at about $5 per month. We look forward to seeing you on the Discord chat.